What is Bitcoin's realized price? Breaking down this all-important on-chain metric. Welcome back to the Bitcoin Layer. I'm Nick Bhatia. Today, I want to teach you guys about Bitcoin's realized price. This is a metric that we continue to talk about at our research publication at thebitcoinlayer.com/subscribe. And I want you guys to understand really the basics of what Bitcoin's realized price is so that you can follow along. Now, this video does assume you know some of the components to how Bitcoin's blockchain works, but we will also try to make this as easy to understand as possible. The Bitcoin Layer is proud to be sponsored by River. River is a Bitcoin-only exchange, and we believe it is the best place for you guys to go get allocated. Go check them out today at river.com/TBL for a special offer of up to $100 worth of Bitcoin for free when you go sign up. Now, we love River, and we think you guys should go check out river.com/learn if you guys are interested in some of the most basics about Bitcoin. We know that there's a steep learning curve with Bitcoin. We're trying to be an educational resource to you guys at the Bitcoin Layer. But River, not only being a tremendous Bitcoin-only exchange, they are there to teach you about Bitcoin as well. They're even there to encourage you to take your Bitcoin off of River into your own wallet. So learn how to do that at river.com/learn. And make sure to go to river.com/TBL for that special offer. Now let's start with a Bitcoin node. What is a Bitcoin node? A Bitcoin node is the Bitcoin software when it's running on your computer. So remember that Bitcoin refers to the software and then the currency within that software. So anybody running the Bitcoin software is running a Bitcoin node. Anybody running a Bitcoin node is able at all times to see the entire record of transactions in Bitcoin's history. That is called the blockchain. The blockchain is a set of blocks. Blocks are groups of Bitcoin transactions, and then they're chained together via proof of work over time to give us a ledger of all the Bitcoin balances out there, as well as how they have moved through time. Now, the next vocabulary word we have to learn is UTXO. This stands for unspent transaction output. Now, I'm going to explain what a UTXO is by starting at the beginning of a Bitcoin's life cycle. So how does Bitcoin come into existence? Bitcoin comes into existence when a miner finds a valid block and then broadcasts that block to the entire network, and then the entire network downloads that block, adds it to their own blockchain, and shares that block with everybody else. In that process, we get new transactions that are added to the entire network's ledger. In each block, there is a miner that wins some Bitcoin, and that Bitcoin is brand new Bitcoin. That is how Bitcoin comes into supply. A miner is awarded new Bitcoin per the original supply schedule. And remember that Bitcoin will never have more than 21 million coins in existence, and this follows an exact schedule. The first 210,000 blocks, or about 4 years, there were 10.5 million coins that came into existence. The next 4-year period, another 5.25 million Bitcoin came into existence, and then that process continues to repeat every 210,000 blocks. Now, checking our block explorer, I can tell you that we are currently at block height 834,250. So that means we are only just over 5,000 blocks away from the next halving event. That is when the supply for each individual block that is introduced to the overall supply will go from 6.25 to 3 1/8. So right now, 6.25 Bitcoin are awarded to every miner when the miner wins a block and broadcasts that block to the entire network. So now let's think about UTXOs from the block reward perspective. So let's say that you are a Bitcoin miner and you find a valid block. What does that mean? That means that you have been awarded the Coinbase transaction. This has nothing to do with the publicly traded company, which has a Bitcoin exchange. We are talking about a Coinbase transaction. That's where the company gets its name from. It describes the transaction in which the miner receives the block reward. So that 6.25 Bitcoin that the miner wins is actually a transaction which goes to an address that is in control of the miner. So the miner puts in his or her own address and tries to win a block. And when he or she does, 6.25 Bitcoin is awarded to that new address by the protocol, not by anybody, but by the protocol itself. Remember that a protocol is a set of rules, and Bitcoin has a supply schedule that is set in stone. So 6.25 Bitcoin now comes into the new address of the miner. Now, in this transaction, every Bitcoin transaction has inputs and outputs. Inputs are where the money came from, and outputs are where the money is going. Now, in a Coinbase transaction, there are no inputs because the brand new Bitcoin supply doesn't come from another user or another existing address. It comes from the protocol itself. So now the Bitcoin miner has control over a brand new Bitcoin balance that is called a UTXO. So that UTXO now has 6.25 Bitcoin in it. It is unspent. So this is an unspent transaction output. Output because it is the result of a transaction, and it is unspent because, by definition, a Bitcoin output is not yet spent. Now, let's fast forward in time a couple weeks, and let's imagine that this Bitcoin miner now has an electricity bill that he or she needs to pay. So, that Bitcoin miner sends Bitcoin to an exchange, sells the Bitcoin, and wires dollars to the checking account and uses that money to pay the utility company. In that process, what has just happened with the Bitcoin transaction? You have destroyed the UTXO and you have created a new UTXO. But how many UTXOs have you created? It depends actually on how much is being spent. Now, let's imagine that instead of selling the entire 6.25 Bitcoin, this miner has decided to only sell 1 Bitcoin. So what happens with the UTXOs? A UTXO of 6.25 is destroyed when the miner sends the transaction to the exchange. What is created? 1 Bitcoin will go to the exchange's address, and 5.25 Bitcoin will come back to a brand new address controlled by the miner. This is called change. Just like when you buy something for $10 and you pay with a $20 bill, the merchant will hand you the good and $10 change. Bitcoin transactions work in a similar way. So when you spend 1 Bitcoin from a 6.25 Bitcoin UTXO, what you are doing is you are generating a 5.25 Bitcoin UTXO back to yourself in a brand new address created by your wallet. Your wallet does this automatically behind the scene when you spend only part of a UTXO balance. Think of another example. If you are a merchant that is selling goods for about $10 at a time, so you're collecting a few thousand sats each transaction, and then at the end, you've aggregated about $100 worth of Bitcoin. in several transactions, you want to send that balance to the exchange in order to sell it for dollars, wire the dollars back, and pay for your cost of goods. In that process, you are taking 10 UTXOs, destroying all of them, and creating one new UTXO that goes to the exchanges, that is within the exchange's control. So you can see that UTXOs are created and destroyed all the time. One is created when a new block is mined. And then Bitcoin UTXOs are created and destroyed all the time as transactions are being sent across the network. Now, as of right now, in block number 834,250, it looks like we have about 166 million UTXOs in the UTXO set. That means there are 166 million little slices of the Bitcoin network. And remember that currently there are approximately 19.65 million coins in existence. That is approximately 93.5% of all Bitcoin that will ever exist. Now that we've covered some of the basics of Bitcoin's UTXO set, let's go a little bit deeper. Now, here's the interesting thing about UTXOs and why they are so important from an analyst's perspective. UTXOs allow investors to track two data points in every address on the Bitcoin ledger: the number of coins located in each address, or the volume, as well as the time that the coins have spent in each address. And this is measured, of course, by block time, but can be also expressed in our regular time. Now, UTXOs are the backdrop for realized price, which we are leading to. But let's pause now the UTXO explanation for an analogy for the market price of Bitcoin, because what we're talking about today is realized price. And of course, we want to compare it to the market price. That is the source of confusion, I believe, out there. The Bitcoin price is $70,000, while the realized price is $25,000. So what is the difference? Where is that difference coming from? Let's talk about the market price for a second. Now, the market price is what we believe to be a theoretical price of Bitcoin instead of the realized price. Now, why is the market price theoretical? It doesn't feel very theoretical because at any time, anybody with Bitcoin can sell the Bitcoin for dollars. So it doesn't feel very theoretical. But let me explain to you why it is. Let's imagine that you want to buy Bitcoin. You have dollars in your checking account. You wire those dollars to a Bitcoin exchange. You use that money to buy Bitcoin. You hold the Bitcoin on the exchange. You don't remove it from the exchange. You don't send it to your own wallet. And then a few months later, the price goes up. You sell the Bitcoin and you wire the dollars back to your account. You, as a speculator, never used the Bitcoin blockchain. You never created or destroyed a UTXO in that process. Your exchange might have done something behind the scenes, or your exchange might not have and just balanced that order with some other sell order to cancel out. So what we do know, however, is that you as an individual never used the blockchain. You did not send a Bitcoin transaction or receive a Bitcoin transaction. If you just wired money, bought Bitcoin, never withdrew the Bitcoin, and then sold the Bitcoin for dollars and wired money out. So that type of hot money transaction is not part of the realized price calculation, and we will explain why. Let's explain why by thinking about why the market price is theoretical. The market price is theoretical because anybody with a Bitcoin balance only realizes that price when the person moves the Bitcoin or spends the Bitcoin. So moving it to an exchange is the same thing as spending it, because what you are doing is you are destroying the current UTXOs that you have control of. And in a Bitcoin transaction, you are creating a brand new UTXO that is now in the control of the person that generated the receive address. So that could be the exchange or some merchant, for example. So when you send a Bitcoin transaction and destroy UTXOs and create a new UTXO, in that process, you are realizing the price of Bitcoin. You are realizing a theoretical price of Bitcoin. So it's theoretical until it's realized, and it's realized when there is a transaction. So when you are trading on a Bitcoin exchange, you are not realizing any Bitcoin whatsoever because that movement is only happening in a third-party, non-blockchain environment. Again, the exchange itself might be buying and selling coins from other places and realizing value. But in this isolated example, there is no evidence that coins are moving on the Bitcoin blockchain itself. In that way, the market price represents the price of dollar balances held on widely traded exchanges. It's different than the price that is the aggregate of the cost basis or the realized value or the stored value of the network. So I'm going to explain that a little bit more, but there's your first introduction to the difference between realized price and market price. Now, let's talk about realized price. In order to do that, we do have to first talk about realized capitalization because realized price is a pure function of realized cap. And the way we think about Bitcoin realized value comes through the realized capitalization formula. The realized cap is the sum of all UTXOs times their price at creation individually. Now, what does that mean? It means that we have 166 million UTXOs in the UTXO set. Now, each one of those 166 million UTXOs were created at a specific point in time. They were created at a specific point in time with a specific price associated with that time. Now, this is an important concept to understand that realized cap and realized price are not taken directly from the blockchain. They combine blockchain data, which is the UTXO movement, with price data, which is not native to Bitcoin's blockchain. You cannot download the Bitcoin software and start looking at the Bitcoin dollar price. That is not what the Bitcoin software is about. The Bitcoin software is about the blockchain, the chain of Bitcoin blocks, the chain of transactions. The Bitcoin price exists on exchanges between dollars and Bitcoin in third-party environments, not on the blockchain. So that environment has its own price. Bitcoin moving, so actual Bitcoin transactions only happen when those that have Bitcoin are willing to part with their Bitcoin, either to spend it for something or to sell it for dollars to put in some other investment vehicle or to do, frankly, whatever with it. So that's why we have different market prices and realized prices. The realized price only happens per this formula when a UTXO is created. And a UTXO is created either with a new block, but most of the time it's created when other UTXOs are destroyed, and that is when Bitcoin is moving. So we have 166 million UTXOs and 166 million different prices at which each one of those UTXOs was created. What we do is we multiply each UTXO by the price at which it was created, and we sum up the products individually, and with that, we get the realized capitalization of Bitcoin. We then divide that by 19.6 million to get the current realized price. So that is the mathematics behind it. Now let's put some words to it and try to finish with a couple different explanations of realized price in plain English and see how we are doing in terms of understanding this metric. Now, here's a definition I like. Realized cap is the stored value of Bitcoin calculated by summing up each UTXO multiplied by the price they last moved. So it's stored value because the storage of value happens when the Bitcoin is moved on chain. Imagine now a scenario in which you wire dollars to your Bitcoin exchange. You purchase Bitcoin on the exchange, and then because you have a desire for self-custody, you withdraw the Bitcoin to your own cold storage device. You are using the blockchain one time there. You didn't use it to buy Bitcoin, you just wired dollars. But when you withdraw the Bitcoin, you have generated an address from your own device, from your own wallet, and that address you've shared with the exchange. The exchange then sends you Bitcoin to your address, creates a brand new UTXO. And what we do with this formula is we look at the price, we multiply your balance by the price, and that is the stored value of your UTXO. We repeat that process across the entire network to get us the realized cap. That realized cap, then we divide it by the supply, gives us the realized price. That realized price then gives us what? It gives us the average cost basis or the average stored price of Bitcoin. Now let's relate the two. One more time. Market price and realized price. Market price is the price of Bitcoin on exchanges. It is the price for Bitcoin when exchanging dollars for Bitcoin. Realized price is a backwards looking metric that is not tradable, but instead what it's doing is it's aggregating the entire history of Bitcoin movement and telling you at what price that happened. So now let's go to the chart of Bitcoin's market price versus its realized price. Now let's look at a chart of Bitcoin's realized price. And what you notice is that Bitcoin's realized price actually moves in a somewhat stepwise function, not this extremely volatile way in which market price moves. Remember, the market price, if you think of it as a theoretical price, it's moving so much because nobody actually knows what it's worth at any given time unless buyers and sellers are moving the coins themselves on chain. And when they move them on chain, the realized price moves. So what happens is that realized price, as it increases very, very nicely in a bull market, as two things are happening. One, new buyers are coming into the market and withdrawing those coins from the exchange into their own cold storage devices. And number two, holders that have been holding Bitcoin for a long time start sending their coins from cold storage to the exchange in anticipation of selling and taking profits and selling those coins to new entrants that are probably buying very late into the cycle. So there are two dynamics that can drive realized price higher in a bull market. And what we've seen right now is that we believe we are at the very early stages of this next bull market, with realized price increasing extremely quickly as coins are moving from the exchange onto the platforms of these ETF managers. We know that they're starting to tuck away thousands of coins per day. Those coins going into cold storage are brand new UTXOs. Those UTXOs are being struck at prices of $60,000 and $70,000, of course, dragging the realized price up and the realized cap up of Bitcoin. But what is the discrepancy? The discrepancy is that there are millions of coins of Bitcoin in Bitcoin supply that haven't moved in several years. And so what is the stored value of those Bitcoin? Very low, in the hundreds of dollars or in the low thousands of dollars. So if all those UTXOs are 8, 9, 10, 11, 12 years old, what is the realized or stored value of each one of those UTXOs? It's very low. Therefore, the aggregate realized capitalization of Bitcoin is going to be lower than the market price of Bitcoin and the market cap of Bitcoin when we are in a bull market. This is not always the case, of course, as we know, in bear markets, the market price can fall below the realized price, meaning that on average, even long-time holders that have held for a long time, on average, are at a loss in their holdings. So that's why we have to measure market price relative to realized price. Now, is realized price some perfect metric? No. We know that there will be several million of Bitcoin's 19.5 million currently supply, and eventual 21 million. We know that several million coins have either been lost or destroyed. And we believe that Bitcoin's supply in reality will never be close to 21 million because many of the early coins were lost or destroyed. And so in this way, we know that realized price is not some perfect metric because many of the UTXOs will never move again. And so it doesn't give us a great sense of what is going on with the coins that will or are likely to move again. But what we don't know is the exact coins that will or won't move. And in that way, the best that we have is using the entire UTXO set and striking each one of those UTXOs at the price at which it was created, aggregating those up, giving us the realized capitalization of Bitcoin divided by the current supply to give us the realized price of Bitcoin. We hope you guys learned about realized price. Make sure to send us your follow-up questions, comment, like the video, subscribe to this channel, and we will catch you guys next time. The Bitcoin Layer is proud to be sponsored by River. Go check them out today at river.com/TBL for a special offer of up to $100 worth of Bitcoin for free when you go sign up. Now, we love River. They are a Bitcoin-only exchange. They allow for deposits and withdrawals via Lightning Network. But the most important thing about River as a company is that they do not use a third-party custodian for the Bitcoin that you buy. When you buy Bitcoin, they go out into the market, they buy the Bitcoin, they put the Bitcoin in their own multi-signature cold storage solution, so it is not held with a counterparty. You guys have seen that over the last couple weeks, as the price has been pumping, other exchanges out there have gone down. River has not gone down, it has stayed up. They're testing their platform for rigorous scenarios in which a lot of users are coming in and the price is chopping around. Make sure to check them out, river.com/TBL today.